55 points on the Nifty. So that's a good pullback that we've seen. But let's focus on Coal India. And Coal India, on that stock, Nuvama's got a little bit cautious out there. And this post the big run that we have seen in the last 6 months or so. The stock is up closer around 15% or thereabouts. What the street liked in the last 6 months was that, in fact, though pricing was a little bit subdued, but volume growth was there. And now that volume growth trigger, that seems to be fading away. So let's run you through a few details from a Nuvama note. They've gone ahead and they've trimmed the target price on the stock. They're recommending booking profits on each rise. So any kind of bounce is what they're saying you can sell into. And the key reasons are a couple of data points that have come out. First is for the month of August. The sales volumes numbers that did come in, that showed that the volumes are down by close to 12% on a year-on-year basis. They posted volumes of close to 52 million tons. And Nuvama highlights, they're saying it's not just a problem of the monsoon. They are highlighting that demand is weakish. We're seeing captive mines ramp up, and there could be a case of imports coming in as well. So they are a little bit cautious on the volumes front. The next factor they're pointing out is on the e-auctions data. E-auction prices on a sequential basis, that's in August in comparison to July, they're down by close to 11%. And that's a little bit worrying. So volumes are not picking up. And in fact, even on the e-auction side, you have pricing that is a little bit weak. And they're also highlighting in the last few months, the e-auction volumes on a monthly basis has come down to around 6 million tons. Remember, the previous month it was around 6.5 million tons. And in August, it was around 8 million tons odd. So not just e-auction prices are falling, even e-auction volumes are falling. And that's why they're saying, year to date, the e-auction volumes actually haven't shown any kind of growth. The hope was that volume growth will offset any kind of pricing degrowth. Finally, they have gone ahead and they are lower their EBITDA estimates for the next couple of years by 4 and 4.5% because they're expecting muted pricing, and they've also cut their volume estimates by around 1% for the next 2 fiscals. So put all of this together, Nuvama is a little bit cautious on Coal India.